So another segment where a lot of things have happened last couple of years, gas markets, LNG, LPG.
Wow.
What are we looking at here? Selective as well?
Yeah, selective. Very different, of course. LNG is a market that we've been, I mean, it's very hard not to be extremely bearish on LNG shipping, to be honest, because to me, that looks, what we've seen, what we had in 2022 is very much what we had in 2011. If you recall Fukushima back then, this was, I mean, LNG shipping, that's pipelines at sea. It's really, projects, you sell out your volume mostly. The US is changing this a bit, but historically you have an off-taker, you sell your volume for 20 years, you know where the cargo is going. And then what happened almost 15 years ago was that the Fukushima accident, tragic tsunami back then, shake things off a bit. So you suddenly had a spot market, which we didn't really have. Spot rates went sky high. You did 2-3 year time charters at stellar levels. People ordered a lot of vessels. Also for new projects, of course, coming, because the world saw, okay, we need more LNG. Projects were delayed, but eventually, when you have a $10 billion LNG export project, you're not going to rely on the spot market. You order the vessels. That's the only sensible thing to do. So that, of course, when people ordered vessels speculatively back then, projects were a bit delayed. Global natural gas prices were depressed, so you have no real trading margin to play around with. That market was dead, basically, until, you had another event in 2022 with natural gas prices surging on the back of Russia-Ukraine. So 2022 was a fantastic year for LNG shipping, and then we are again, speculative ordering, of course, again, project delays, with especially in the US. And then we are now in a market with an order book that is still 40% of the fleet, or even a little bit more, and the spot market that is just not responding to natural gas price spread or volatility anymore, which tells me that it's completely broken. It's just far too many vessels. So I think we probably need to scrap 100 or so older vessels. It's probably going to happen. And then let's see where we are 2, 3, 4 years from now. But the owners of good quality vessels will be fine 2, 3, 4 years down the road, but the ones without coverage at the moment, I think, will struggle until we have, a new black swan event, which can happen, and then things will change. But it just looks challenging to me.
If we talk about LNG and shipping, is Golar LNG the one that seems a bit interesting? I see some people speculating that this can have a very interesting journey ahead based on some contracts. Argentina is mentioned. Can you unpack what makes Golar a different company? I mean,
it's not. Golar shouldn't be covered by me. It's not a shipping company. It's different. And again.
But do people perceive that?
Yeah,
or
nah. It's a good point, because it's still covered by me, because I did that 15 years ago, 14 years ago. So it's not a shipping company at all. It's more like infrastructure FPSO provider with 2014, 15. So 2014. If you take the past 10 years, Golar's been through a full-blown energy crisis, the oil price crisis, which impacted natural gas. But they've managed very, very well. They built a flawless track. I mean, Hilli, the liquefaction ship. I remember again when they started talking about that in 2013. That wasn't when they started talking about it, but then it got a bit more specific. I read that FLNG vessels, they're lower risk than FPSOs, and my oil service guys, colleagues, they said you can't say that because it's not done, so it's not less risky, and I understand that. But what Golar is doing is they're taking pure methane and converting it to LNG. So they're not separating out condensates or NGLs or anything. They're taking essentially pipeline quality methane, liquefying it, And so it's like a very sophisticated freezer in a way. And what they've done with Hilli is impressive, because they haven't had a single day of downtime really. They've been managing flawlessly from day one. And of course their kind of value proposition is that they do that in a very cost efficient manner. And then making stranded gas resources available for those that want to buy them, essentially. And that has taken time. I mean, they're only now starting up their second unit, a decade after they really started investing in this. But from here on, yeah, you have the one in Argentina going to be the third, maybe another one in Argentina, so they're fourth. And now they have it rolling. I mean, now they can finance both dividends and growth from current operations, right? So they're not dependent on raising equity or raising a lot of debt to do this, or to grow the pipeline, so to say. But of course, I think at when the stock was 40, 45, then you were pricing in kind of 3, 4, 3.5 units. So of course, equity markets will be willing to do that when conditions in broader equity markets are good. When things are more shaky, then it's a little bit more uncertain, right? So. But it's a business model that I think, it's a business that I think 5 years from now, either they will have 3, 4, 5, 6 of these units, and they can start really harvesting dividends, or it's likely to end up, with the kind of a lower cost of capital player. So, build a pipeline big enough, and then someone else can buy them with a lower cost of capital, and then that will be a good event for Golar shareholders.